Deven bhai, good morning. Thank you for joining us. Reliance का समय कब आएगा? Markets at an all-time high. Reliance not nowhere close to its all-time high. Reliance का समय कब आएगा?
Yeah, Nikunj, good morning. As far as you and I am asking the same question, because as far as the fundamentals of the companies are concerned, they have never been in doubt. On the contrary, I think they are probably much more clear than what they were ever before. Geo platform, retail business, those consumer-facing businesses, they definitely, I think, show a distinct amount of signs of, I think, steady growth, sustainable growth. At the same time, I think the industrial businesses in form of refining, exploration, petrochemical polymers. There too, I think the larger pressure which was there up till now, I think that has gone away and maybe maintaining their delta so very well in each of the products. So from my perspective, I look at this company from the long-term investment, of course. I believe that I think the business of the company remains absolutely strong, solid, and sustainable. They continue to grow at a steady pace of growth, even on a larger balance sheet like what they currently have. I believe that I think the stock requires a follow-up. I think as far as the funds are concerned, to add into the portfolio, the weightage into their portfolio. Should that happen, then probably I think you are likely to see the larger amount of participation into the stock price of the stock. But as I say, fundamentals remain absolutely convincing. I think it could happen anytime as we are talking today.
Deven, why am I bringing up Patanjali is because this is one stock which is nowhere close to its all-time high, and the fact that they have to bring the ownership down and the roadshow had started. What is your view on Patanjali as a stock?
So I think remain absolutely convinced about the underlying story of the business in each of the vertical. Uh, so in personal care, even in food, I guess I think this company has been basically making significant amount of progress. What probably it lacks, I believe, I think is the kind of an approach to sell. I would think because currently the way in which I think the products are sold, they are moving steadily. I think they have penetrated the hinterland so very well. However, I think in order to get the premium segment out of this particular product, something which they have started with, I think by creating their own stores, I think that has to get a little bit of more momentum. Should that happen, then I think there is a margin expansion possibility that is also equally important for this kind of business, which is currently I think not happening as much as one would have expected it to. So that is where probably I think the influence of right kind of investor could also help. And I mark my words carefully because I think ultimately I think you require the good quality support as far as I think the underlying thinking process is also concerned. That is where some of the right kind of investors would probably help. In my viewpoint, I think the stock remains relatively more convincing. The growth path is, I think, relatively more steady. The customer segment has, I think, remained loyal to them all along. So, in my viewpoint, I think it is a time where probably you need to carve out the niche by way of, I think, creating some kind of premiumization in your product categories. And that's where probably you could see higher amount of margin as well. Let's see how exactly things turn out, but I remain confident about the possibilities.
Another stock which I think is worth revisiting, Deven bhai, I think is HDFC Life. Insurance really has been the black sheep, so to speak, in this entire market rally, and they've just not chipped in. The price action in HDFC Life on Friday, other life insurance companies also, they in a sense outperformed on Friday. Has good old insurance sector, Deven bhai, rediscovered its mojo?
Because I think in previous 2 years, if you see the valuations of these life insurance businesses, probably I think they remain relatively on elevated levels. And as a result of which, I believe that failed to attract, I think, the investors because they were already premium and trading expensive. But in such last 4 quarters or so, if you see how the trend has been moving for the new insurance business premium, I think you find that selectively in respective pockets, you are seeing the 20% kind of a growth continuing on a yearly basis as far as the new business premium is concerned. HDFC Life in particular has created a portfolio which is quite a balanced portfolio. On one side, they have got a single premium policies, the par and the non-par policies that they have. And as a result of which, I think the basket is quite, I think, equally distributed. So in a given situation, this company will steadily grow. They will not grow exceptionally fast, neither they will go down, I think, very badly, bad situation. They will remain steady growth providers. And that is what is probably market is adjusting to, I believe, as far as I think the understanding of the business is concerned. Maybe as I explained earlier, the price part has always remained, I think, a little bit more premium because of variety of reasons in earlier period. That also got adjusted. I would like to believe that I think this business is expected to provide around 20% plus kind of a return on a yearly basis if it remains in this kind of a steady format for for a good period of time hereafter.
Wanted your take regarding the railway stocks. They have been chugging along quite nicely. Today, of course, there was that initiation that came in from Antique on Titagar, talking about an upside of almost 150, 200 rupees. Do you concur with the view that these railway stocks and the capital good names are is the space to be in?
Yes, I think given the fact that the government is the biggest spender today in infrastructure space, and railways included in it, I believe that there is no second thought or no question asked on this particular subject of you seeing higher amount of visibility of order book. And I think government has already laid down the roadmap for 10 years that they want to spend about 110 crores in building the infrastructure in the country over 10-year period. This year's budget has been set 10 lakh crore. Last year, I think it was 7.5 lakh crore. So obviously, I think a good share of money is definitely flowing towards the infrastructure segment, and railways, I think, definitely getting larger chunk out of it as well. In my viewpoint, I think the railway stocks will continue to see the steady to higher rate of growth because of this particular spending by the government. So demand side scenario remains absolutely very strong and convincing. On the other side, I think you have the challenge in form of expanding your margins. And that is where I think one will have to be a little bit more mindful about selecting the stock in the portfolio. Because being government companies or government is a main buyer, I think these companies do not get higher amount of margins. And as a result of which, I think the challenge would be always that I think they will be executing larger order book, but I think at a contained margin. Given that situation, any kind of a premium valuation in the stock price would mean that I think the stock will probably underperform over a period of time. So that is where I would be mindful about it. That whenever I think market gives opportunity at a corrected valuation, some of these stocks could remain a good opportunity to buy or pick up. I think February, March was relatively a decent period in which probably we ended up getting some opportunities. Similar opportunities, if we do get in the future, probably I think they should be considered for investment at a lower valuation.
So that railway capex theme is something that you're watching out for. But what about defense? Now, with this Prime Minister's impending visit to the US, the focus is back on the defense names. Devin, do you think the upside is already priced in because it's a long gestation period? It's not going to turn overnight, and you will not get the revenues just say in a quarter or two for these companies.
Absolutely, Anisha. I guess think is more or less the same rationale which is coming up here too. That on one side you have got the defense portfolio opening up, you are getting higher amount of visibility for order book, demand side scenario remain intact for most of the companies. On the other side, the margins are going to be tight, they are not going to be so easily expanding. And at the same time, I think the valuations will run up little ahead of time because of the positive news flowing in. Given that kind of a situation, I would like to believe that I think while the fundamental prospects remains very strong and convincing for defense as a sector along with railways, I would like to believe that I think you will have to buy when the market is giving you a valuation which is neglected or relatively more attractive, or call it simply in one word that where the margin of safety is available. Should that be the situation, that would be a time to buy into some of the defense stocks. I remain positive, but for the reasons which I explained, that any early attempt of making the valuation reach would probably fail the investors and they will have to settle with the stock at a costlier price in their portfolio. So buy when market gives opportunity at lower levels.